Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is a special edition of Market Today where our focus is on the Q3 earnings. The company on our radar right now is Maruti Suzuki. There are good set of numbers that we have got from Maruti in Q3, where the net profit has jumped over twofold to 2351 crore rupees. Its net sales have also risen to 27,849 crore rupees, and both these numbers are above the street estimates as well. Also, we've actually seen this is the second consecutive quarter when the margins have actually come in over 9% as well. Now, to discuss more about the fine print of the earnings and the outlook going forward, I am joined by the top management of the company. Shashank Srivastava joins in. He's the Senior Executive Director, Marketing and Sales at Maruti Suzuki. Welcome, Mr. Srivastava, and thank you so much for taking the time out. Always a pleasure having you with us on Business Today TV. So, congratulations on the strong set of numbers. Do you see the momentum continuing? What were the key factors that led to this strong showing on the net profit, and is it sustainable?
Yeah, so a couple of factors which contributed to this uptake in the overall operating margins and the EBITDA numbers. First, of course, was that the overall sales were very good. The volume was good. Second, the mix, more importantly, was better with the new models, the Brezza, the Ertiga, the XL6, the Grand Vitara, is a much higher value items. And therefore, you would have seen that the net sales is actually been in these 9 months the highest ever for Maruti Suzuki. So that was one or two more important factors. And the other most important factor was that the effect of slight reduction in material cost was also contributing a lot, because as you know, the material cost is almost 77% of the auto OEM's cost. So advantage there did help us, and some positive movement in the foreign exchange as well.
All right. So, when we talk about the margins, two consecutive quarters of this 9% plus kind of margins, do you see there's further scope of margin improvement going forward?
Listen, it all depends on, of course, volumes and the mix. In Q4, probably the mix should be good, but obviously the volumes would depend on the semiconductor availability. There are some issues there in terms of the overall availability, because the problem of electronic components still continues.
Yes.
And of course, it will depend a lot on the material cost movement. So, it's still quite open, so I'm not going to suggest that it's going either.
In fact, this is the point that I wanted to discuss a little bit more, as to understand how are you really assessing where are we at currently when it comes to these key concerns of the supply issues and the semiconductor challenges as well. How much have they eased out? Is it like, have they eased out completely? Some more pain really remains, and that may actually show up in the going forward quarters too.
Yeah, so if you remember, the nadir of the problem was in August of 21, when we could produce only about 40% of our plant production. Consistently, it has improved as the semiconductor situation became better. In fact, by the time it was December, we were almost like 88-90% of the plant. I'm talking of December of 21. And then in 22, first quarter, we could achieve almost 92-93%. And consistently, we have been around that 94-95% mark. So there seems to be, we haven't gone beyond that. So now the problem is, of course, limited to few models and specific vendors, but still the problem is there. And I don't think that Q4, this problem is going away. We are probably going to see this problem, and also sometime in the next financial year as well.
Okay, but how soon do you see the production levels for you really come back to normal, and what's the outlook on volumes?
So that is a $1 million question, as they say, because, going forward, the visibility of the semiconductor supply is still not very clear. So we are revising our estimates every time we get inputs as far as the visibility of electronic components is concerned. However, I must say that this financial year so far has been good. The industry already clocking in about 2.8 million type of volume already, 2.87 million. And this quarter looks like in the industry to be 1 million plus. So we should end up with something like a 3.85 to 3.9 million units for the financial year, which should be the highest ever in Indian auto industry.
Okay, so definitely highest ever volumes, definitely looking at positive side right there. Could you also share something more on how the pricing trend looks like going forward? We did see some discounts in Q3. What's the outlook going forward? Are we going to see some more discounts coming in?
So really, it has been a tale of two cities. We have a set of models where we have good availability, specifically the 1 liter models. And for the other models, we still have that problem of supply. So you
Yeah.
would have seen, as you rightly pointed out, Q3, there were discounts in the lower end models. However, we still have pending bookings. Today morning, I was checking almost 4.07 lakh pending bookings. So
Oh,
those
okay.
are in models where the supply is still not normal, and that's the leading to this high waiting period in those models. So really,
Okay.
two different sets. On one side, consumers often ask that you have so many pending bookings, and then the analysts ask why there is discount on some models. It is because of the
True,
mismatch in
true.
the demand and supply. And as you know, the discounts are a function of the availability, the supply demand gap. So there are models where we are not able to supply, and therefore no discount. On the other hand, some vehicles, some we are able to supply, whereas the demand may not be as much.
Sure. Since we are talking about pricing, I wanted to understand, going forward, say in coming April, we will see the new RDE emission norms also coming
Yeah.
in. What could be the impact of that on the overall industry for you as well? And what could be the impact on the cost, especially when we talk about the diesel vehicles?
Yes, so as you rightly pointed out, there is going to be a big impact as far as diesel vehicles are concerned. Fortunately for Maruti Suzuki, we are not in that diesel space,
Yeah.
and the effect of the RD norms on the gasoline models is a little less. And apart from that, we have also been, over a period of time, building the capability and specs to meet the RD norms already in some of our models. So you would see different OEMs going for different type of price hikes in going forward in April probably. Although Maruti Suzuki has also increased prices in January, as
Yeah.
has had most of the other OEMs as well. So we will have to see what is the impact model wise, fuel type wise, powertrain wise for the RD norms. And all as a general thumb rule, I can say for gasoline it's going to be less, and for diesel vehicles it's going to be very high.
Okay. On bookings and inquiries, sir, what's the kind of traction that you're looking at? You talked about the pending orders, that's okay. But then, in terms of specifically booking and inquiries, especially because recently you also launched the two new SUVs, Jimmy and Fronx. What's the initial
Yeah.
response that you're getting there too?
Yeah, so in terms of the booking figures and the inquiry figures, which are actually the basic blocks on which is built the retails and the bookings, there we see actually a quite good traction, which still continues. In January to January comparisons, probably about inquiries about 20-21% up, and bookings up about 18% in the month of January if you compare with last year's January. However, our bookings and inquiries also include the new model bookings and inquiries, the two models that you just mentioned, the Fronx and the Chimney, which we launched in the SUV space. Just on the we unveiled it on the 12th of this month. Those numbers are also pretty strong. Jimny getting bookings of almost 800 cars bookings per day, and
Okay.
Front's getting almost like 350, 400 per day. So those bookings are also being added. So maybe they are sort of giving a much rosier picture, but like-to-like models, probably the growth would be very small.
Sure, sure, sure. Also, a word from you on the market share. Where are you at currently, and what's the outlook going forward? Are you confident of regaining some of the lost ground there as well, both when we talk about the SUV and the non-SUV part?
Yes, of course. Our market share currently is just above 43%, and the in quarter four probably it's going to be a little higher. But you are right. If you look at the non-SUV market share, Maruti Suzuki's market share is upwards of 65%. That's huge. But when you include the SUVs, then it falls below 45, as I just said, around 43%. So it's obvious that SUV market share needs improvement, and our market share SUVs last year was about 11.5%.
Correct.
So we have introduced these two models. the Franks and Gemini, which go to sale end of March or beginning of April. So we'll have a full year impact next year. Also, Grand Vitara, which started selling in last week of September, we'll have the next full year where we can hopefully we'll also have less of the production problem which we have seen in the Brezza and the Grand Vitara this year. So our market share should go up substantially in the SUV sector and therefore overall as well. In fact, our MD has actually in the unveiling ceremony had announced that we will be the number one players in SUV in the next financial year.
By FY24, you mean?
Yes, 23, the financial year 23-24.
Oh, that's okay. We'll be looking forward to that. So that's a positive outlook on the market share front, becoming a leader in the SUV space as well.
Yes.
Also, when we talk about the green models, the electric vehicles models as well, Suzuki has started out an EV plan to launch about 6 models for India by 2030. Could you share an outlook on that as to how do we see that panning out?
Yes, so we have always maintained that there would be increasing tightening of emission norms from the government in response to the COP26 targets of carbon neutrality by 2050 across the world, and that means that ICE vehicles will see an increase in prices, and EVs will therefore start becoming mainstream. Now, when they will become mainstream is really the debate because there are two big constraints: the high costs of acquisition and the charging infrastructure, which is leading to lesser, absorption of EVs in the industry. However, going forward, it appears that EVs have the largest chance in terms of the mix of powertrains which will be available. So Maruti Suzuki's outlook, and that was also said by Suzuki in their presentation yesterday on their global presentation, which is that we will see a mix of technologies being used at Maruti Suzuki and at Suzuki, which includes EV, which includes biogas, which includes CNG, which includes hybrid, etc. But I would expect that by 2030, about 15% of the vehicles sold by Maruti Suzuki would be EVs, and about 60% would be ICE vehicles. So that is the reason why to get to those volumes of 15%, which will be pretty strong by 2030, very large volumes, you require many models, and that's why 6 models will be introduced by 2030. The EVs will be introduced in India.
Okay, well, on that note, thank you so much, Mr. Srivastava, for speaking to us on Business Today TV and sharing all these wonderful insights about the earnings. Many congratulations yet again for this very strong show in Q3, and all the very best for the coming quarters. And here's hoping for many more interactions to understand more about the auto business and your own growth plans going forward. Many thanks.
Thank you. Thank you very much.
All right, and with that, we wrap up this special edition of Market Today. You heard the management, quite positive outlook coming in. Good set of numbers. The Q3 net nearly has doubled, and the shares have also given a thumbs up to the earnings in today's trading session. Going forward as well, big plans of, perhaps the company really betting on getting the leadership position as far as the SUV space is concerned by FY24 as well. So those are some, big positive comments coming in from the Maruti Suzuki management. Many thanks for joining us onto this special edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel and also stay in touch with us via our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for joining in.